So the US bond market is collapsing. I'm using the continuous tense collapsing because there's still more pain to come. And this is a result of unbridled government borrowing and global investors all losing faith. And we have to understand why. The Federal Reserve, they have stopped hiking rates since July, but bond yields are still continuing to climb week after week. And that is because the supply of Treasury bonds is massively outstripping the demand for US debt. It's very simple. On one hand, you have big whales dumping US debt, and on the other, our best friend Janet Yellen is still issuing a mountain of bonds to fund the US government. And that's why it shouldn't be a surprise that we are facing the worst bond collapse in modern history. Bond investors have been annihilated. Looking at a chart of the 10-year bond, we can see two horrible years of bonds literally crashing to the underworld to meet Hades. This is the worst bond collapse in 150 years since 1871. If you held a 10-year treasury since 2020, you would be down 46%. If you bought a 30-year bond, its value has crashed by 53%, and you will likely be sitting on this loss for years or even maybe decades. The era of zero interest rates is over. The Fed can't bring rates down because inflation is still sky high. In fact, the Federal Reserve has come out saying that they won't intervene. They will let the bond market volatility play out in this historic collapse. In a speech at the Economic Club of New York, he said this: markets have been volatile. You have seen the rates moving up and down a lot. I think we have to let this play out and just watch it. Rising bond yields are exactly what he wants. It is destroying demand, so he isn't going to interfere. The Fed isn't as stupid as we all think. Powell is waiting for the entire system to just implode down, to collapse. Then he'll start printing when the whole world is begging him to. Then he can put on his Superman cape while protecting his reputation. And he's gonna get his wish. I've never seen the US government in such a state of chaos. They can't elect a Speaker of the House. They can't control their spending. And now they're trying to find two wars, one in Ukraine and the other in the Middle East. But it's gonna get worse. Bond yields are likely heading higher because America's biggest economic competitor is done with US bonds. China has had enough. And we know China isn't a big fan of the United States. They've been hit with a ton of technology sanctions as well as investment curbs, but it gets even more hilarious. Most recently, Chuck Schumer went all the way to Beijing to scold China. He wanted them to side with Israel and put pressure on the Iranians to back down. Obviously, Beijing isn't happy about that, and we can see that manifest in their holdings of US treasuries. China sells most US securities in 4 years amid yuan weakness. The bulk of sales in August were for treasuries and US stocks. Now, sure, some of the treasury sales might be to bolster their weakening currency, right? The yuan is down by 5% against the dollar since the start of the year. But there are bigger reasons than that. China is dumping because bond values are going to crash further, and they just don't trust the US government as a counterparty. At the back of their minds, there's always the threat of financial sanctions. In August, the Chinese dumped another $16.4 billion worth of US bonds. And if you consider the year-on-year change, their holdings has dropped by 133 billion. And it kind of makes sense. The Fed has paused the rate hikes, but bond yields are still going up because the US government has a spending addiction. Remember when yields go up, bond values go down, they crash. According to Fidelity, a 1% rise in interest rates equates to a 9% crash in the value of 10-year bonds. And if interest rates go up by 3%, you are down by 27%. And we have people like Jamie Dimon giving a doomsday prediction of 7% interest rates by the time the dust settles. So there are more losses to come. So if you're China, you have to make a decision, right? God knows how long bond values will recover. In fact, they might keep crashing further. US deficit spending isn't stopping. US China relations might even fracture further, so your bonds could end up like the Russian reserves. So the choice is quite obvious here. China might not be outright selling their bonds for loss, but they are most definitely letting their older bonds mature without rolling them back into newer ones. They rather take the money out now and start buying gold, start signing more energy contracts with Russia and Saudi Arabia. They have to buy oil and gas sooner or later anyways, right? And here's where things get wild. China isn't just dumping bonds, they're also getting rid of their US equities. See that turquoise bar over there? That's Chinese investors selling off around $5 billion worth of US stocks. Maybe they know that the US stock market might be on the edge of a cliff. Higher interest rates could be setting the market up for a big Humpty Dumpty fall. Now, it isn't just China dumping. Big whales within the US itself are also letting go of their holdings. We are talking about the big commercial banks and the largest buyer of them all, the Federal Reserve, all getting rid of their treasury bonds. Let's put China's sell-off aside for now, because this might be even worse for the US debt market. The treasury market is about to be flipped upside down, even without Beijing's involvement. In a story by Bloomberg, beware the new treasury buyers sparking fear in the world's largest bond market. More price sensitive investors like hedge funds are piling in. There is a new breed of bond buyers in town, there's a new sheriff in town, and this is a disaster for yields. More price sensitive investors are buying up these bonds. This is a big problem. There are people like you and me, insurance companies, money market funds, and big speculators. The old traditional buyers are either buying fewer bonds or outright dumping them. In 2023, the Federal Reserve could be dumping another $720 billion of government debt. Commercial banks are selling $170 billion, while broker dealers are buying nothing. And here's the issue, all these traditional buyers are price agnostic, meaning they don't really care about the price. They are buying US treasuries to either run their business or to store their US dollars somewhere. For example, the big banks buy US bonds because it is considered the highest quality collateral around. I know that's crazy to people like us, but it is what it is. But what's the point of banks buying treasuries now? Not only do you suffer a loss on your balance sheet, your collateral value is now worth much less. And if you pledge your collateral to buy other stuff, you are now twice underwater. You are effectively drowning. That's why the Wall Street banks are dumping. Now take a look at this new breed of buyers. We have the pension funds, the mutual funds, and the money markets all piling into treasury bonds. Money markets alone are projected to buy $600 billion worth of short-term US debt. But that isn't good news. These are all bargain hunters, and unlike the banks or the Federal Reserve, their number one goal here is to make money. It is all about maximizing profit. The new buyer base is likely to demand a heavy premium to finance Washington's spendthrift ways, especially with debt sales set to surge as deficits swell. And this means they want to hire you to lend money to Joe Biden. They know the situation on the ground. America can't stop spending, so bond values will likely continue to crash. If I'm going to lend money to Janet Yellen, I demand a higher return. And that's why we are seeing bond yields fly up, even though there are more buyers than sellers. The supply of treasuries flooding the market is pissing everyone off. The 10-year yield has been flying up from 4% to almost 5% even after the Fed stopped hiking. Investors, they are getting annoyed, they are angry, they are demanding a bigger return to hold on to US government paper. And guess what? Bond yields are going to go even higher. This disaster isn't over yet, not by a long shot. And I have terrible news to share. And yes, it's horrible news for the bond markets and the economy in general. President Biden is heading to Congress to ask for more money again. And I'm not joking. In a stunning report, Joe Biden is looking for $105 billion for Ukraine, Israel, Taiwan, and border security. That is a lot of money, and here's the breakdown. 61 billion will go to Ukraine, 14.3 billion in aid for Israel. This also includes $7.4 billion in funding for Taiwan. Taiwan? Why Taiwan? Is something going to happen there that we don't know about? So we are really living in the twilight zone. This is Martian economics, and this is driving us closer towards a financial apocalypse. How do you think this money is going to be raised? The Federal Reserve obviously can't print it, right? Inflation is just too high. It's going to be Janet Yellen who'll be raising the money for Joe Biden. She'll be out in the markets flooding the world with treasury bonds, and that's how Congress will get the money. And I don't know whether to laugh or to cry because the real victim here is going to be the economy. The big winner is going to be inflation. The market is already reacting to this news and they are freaking out that Biden wants another $100 billion more. The 10-year yield has crossed the 5% barrier, which is a very big deal. This happened for the first time since July 2007, just before the big crash in '08, just before the real estate collapse. And as Yellen sells another $100 billion in treasuries, This is going to spike the cost of borrowing even further. So it's no surprise that stocks are collapsing. If this happens, the greater economy will start to implode as well. I have no idea how Yellen can really live in a world of cognitive dissonance, right? She admits that high interest rates may persist in the US. Then she goes on to say that the United States can afford to fund two wars, both Israel and Ukraine simultaneously. Her perception management is really falling apart. Yields are flying up because the market is calling out her bluff that the situation is under control because it is not. It is not under control. So far, Congress has approved $113 billion in aid to Ukraine. How much will the total bill for Israel be? The situation there is more volatile and the consequences are far deadlier. There are two carrier strike groups there. The Middle East is the world's biggest oil producer, and Iran is already calling for embargoes. So the spending isn't going to stop, which in turn means the borrowing isn't going to end either. So we are being set up for a big fall here, guys. The Fed doesn't need to hike anymore for the economy to implode. Biden himself can get the job done if he keeps borrowing money. But we can't rule out further rate hikes because Powell just revealed his hand again. According to him, inflation is still too high and lower economic growth is likely needed to bring it down. Additional evidence of persistently above trend growth or that tightness in the labor market is no longer easing could put further progress on inflation at risk and could warrant further tightening of monetary policy. And I'll translate that. He just hinted at further rate hikes, plain and simple. The entire yield curve is about to shift up. The Fed hikes will make short-term rates spike while government borrowing is making long-term yields go up as well. So the bond market implosion likely isn't over, and this will drag the global economy into the depths of financial hell. If the US bond market crashes and yields spike, this isn't just going to affect the United States. Borrowing costs across the entire world will head up as well. Remember that US Treasury set the benchmark rate for the world, right? It is the risk-free rate, not because people love dollars, but because they know the truth. They know that at the very least, the Federal Reserve will step in and print money to make them whole. And this pushes up interest rates for the rest of the world, especially in the emerging markets. Then we'll see a global economic slowdown. The whole world is synchronized together. So we have to watch the Middle East crisis very carefully. Even Russia is warning that this conflict could spiral down towards a regional crisis. There's currently no ceasefire agreement and all bets are off. If things escalate, the war spending will not end, and that will push the global economy towards the abyss. But let me know what you think in the comments below. Will the bond market collapse further? And how much more money will President Biden borrow? Another 50 billion? Another 500 billion? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.